Good morning, everybody. Sounds good. Good morning,
Good
everybody.
morning.
How's it going, Eric?
Doing well. How you doing, Gav?
I am doing good. I'm here in New York City,
Ooh, nice.
hosting a big event tonight. Excited for it. Had a billboard up yesterday. It was a good time.
Yeah, I saw that. I saw that. It was really cool to see that. I was like, wow. Gee.
Yeah, so it's been fun, but excited to get into the thick of things this morning. What have you been watching, Eric?
I've just been watching the news so far today. The PPI index readings came out, and so with the jobless claims, I think the big surprise today was PPI coming in at a negative 0.5% month over month, which is I was like, wow, that's surprising. So maybe the inflation is starting to finally come down because I haven't seen a negative reading for some time, especially that magnitude. And just seeing how the markets react, it's been kind of muted. I thought there'd be a little more, but I think there's probably some confusion now about whether or not this is actually going to happen, in this being the recession, or Fed's going to start cutting rates. But there's still some sticky parts of the economy that just are very stubborn about coming down. I think that's kind of what Powell and his group are really focusing on. I think that's the housing portion and shelter inflation. So we'll see, but it's definitely starting to make this market a little nervous, but there's definitely not as much upside left as what I think. But who knows? I could be totally wrong. This is just what my personal thoughts are.
No worries. Good stuff. Appreciate you starting us out with that. So I
Yeah.
think the idea for today is probably starting out with about 15 to 20 minutes of some market analysis, some thoughts, and then we have some great former pit traders on. So we are going to also talk stories, talk lessons, things along those lines. Good morning. Oh, the Strat. What are you watching today? Oh, so we got some more coming up.
Hey, thanks for having me on. Really, I'm just looking at today kind of being a little bit more calm than yesterday potentially on the ES. We've got pretty big range that we worked with yesterday. So if we get any more continuation to the downside, I'll be looking for some more downside exposure. We are already two down on the day, so what I'm looking at is the fact that we already went directional, but that happened during the Globex session. So with lower volume during the Asian session and breaking two down doesn't really add significant weight other than we've already gone kind of two down. We've already kind of gone directional. So as long as we stay below 41.36 and a quarter, that's what I'll be looking for is reversals back to the downside. It's also going to be very dependent on the VWAP and where we open this opening range and see if we start to trade above that and we start to see some direction with volume to the long side. If we can get above 41.36 and a quarter, then I'll be looking for the long, and that is referencing the ES.
Okay, sounds good, Strat. Thank you. All right, let's see some new people joining us. Mr. Top Step. Good morning.
Hey, good morning from sunny Delray Beach.
Nice to have you here with us. Would love to hear some of your thoughts on how the market's been going and CPI and all that good stuff.
You know, I think CPI came in pretty much expected. Where people expected it to, that inflation was going to downtick a little bit. I think that's just a temporary thing. As far as the S&P, I think we're really kind of range bound here. I am a seller of rallies. If the S&P gets up toward the 4150, 4155 level, I think I'd put some on up there, maybe add a little toward the 4160 level. I don't expect a big range either today. I think that there's probably good support down toward the 4104, 4098 level. We saw a little pickup in volume yesterday, but overall, this week has been a pretty light volume week.
Okay, thank you. All right, gonna keep it rolling around here. Just real quick, a note for everybody: if you would like to talk at any point, just for those that are newer to Spaces, there's a raise hand feature, and that'll allow me to just come right to you. It's where there's a heart on the bottom of the screen with a plus sign on it, and then when you click that on the right side, there's a little raise hand feature. I just ask when people are not speaking that they do mute out because we can hear everything going on their end and the background noise, and others are trying to talk. So I just ask that. But if you are trying to speak, definitely raise that hand. MTZ, are you trying to speak here?
How's it going? Good morning. Thank you for doing this, by the way. Danny, how are you? It's so good to hear your voice.
Good hearing you too, Mark. Waiting to hear what you got to say today.
Well,
It's going to be a good get together.
number one, I think that just doing this is that, everybody that worked on the floor, everybody segued into different things, and you have some guys, Danny, Pax, that have, I don't know, it's been 15, 20 years that I talked to Danny. I wasn't even on Twitter. I went back to coach college soccer, and then got involved in the youth programs, but just to see how this has built itself and following the various traders for me, and it's hard to verbalize all of it. Spending time on the floor, watching Danny build his operation, watching Pax trade in the pit. I spit out some names here, being involved in things that we could talk about. And Danny said it best on, it's going to be interesting what we talk about. Spending that much time on the floor, watching the S&P evolve from a small contract of, what was a $5 limit, Danny? Wasn't it opening at a $5 limit up and down all day?
Yeah, I think back that was really long ago.
Right.
I mean, probably in the early 80s.
Right. So, and then one thing I'll start out with, and I think Danny and Pax or anybody that worked on the floor can relate to this, and I see it in the day-to-day communication here, reading how people are doing, or basically how they say they're doing, is the amount of effort and battle and work rate that went into building operations, surviving on the floor, going through market movements. I know people get frustrated because this thing flies and now you have bots. We didn't have bots. Is the movement and the volatility of the S&P contract, basically called SPOOs back then, and the survival mode. I mean, one thing I can say to start it off is the guys, including Mish that's on here as well, in New York, whether you're in New York or Chicago, and Danny, you can, or Pax or anybody else can chime in on this and I'll stop, is the ability to survive the beginning of building your career on an exchange. Because the amount of people that walked through that door thinking that this was going to be their career, and I don't know, 1%, 2% made it. And we had a blowout wall where basically they put a picture of someone that had blown up, and you'd be looking around and hey, where did such and such go? And then next thing you know, you walked over and there was his picture. So for me, just listening to this and Danny and Pax, and I know Anthony's not here today, just the ability, I mean, for them to have a career this long in this industry. When I walked on the floor and I wanted to be a professional athlete and I was drafted by 3 teams, it was very clear that very few are going to make it. So I'll start with that.
I appreciate it. I feel like you're warming us up for the stories here that we are going to have during this coming time. Really great having you on again, MTZ, as well. Okay, going to just keep rolling it around here before market open. I actually want to, real quick, I know we're hitting everybody, but I want to bring in stock market news for a second, just because he does give us our morning news brief before we hit market open. So stock market news, you want to throw some thoughts in here?
Yeah, you're definitely good to keep it with the crowd on this one. I am cool with that. We did have a couple stories this morning. We had PPI coming out below expectations. The PPI final demand was 2.7% year over year, below expectations of 3%, and then the month over month was minus 0.5%. Wall Street was expecting an unchanged number. So that's a little bit of an interesting one. We have Apple coming out, and they're in talks with suppliers to make MacBooks in Thailand, reportedly, according to Nikkei. And there's also a couple other stories about them trying to, I believe it was Cobalt, get that out of their production by 2025 was the time. And then we also had Bloomberg. They're reportedly planning to integrate a GBT-style AI into its terminal. And then kind of on that topic, Amazon CEO Andy Jassy put out his annual letter this morning, and he was also on a CNBC interview. So there's a couple quotes out of that one. You can go and take a look for yourself. But the one I kind of gravitated towards was the AI and Jassy saying that Amazon is working on large language models and generative AI. And he said that he thinks it's going to be a big deal for customers, shareholders, and Amazon. So that's kind of where their focus is at. AMD put out a new graphics card today. They said it's the most powerful workstation graphics card to date. That's their quote. We'll see on that one. And actually, one last quote here, and then I'll throw it back to you. Is another one from Amazon CEO Andy Jassy. He was asked if Amazon is planning any more layoffs. He said, "We don't have an intention of doing anything more meaningful." He did add that any reasonable team would kind of change as the information changes and the economy changes. But currently, they have no more plans for any major layoffs over there. Actually, I might have lied there. Last story I'll leave you with here, or two more. IBM is planning to sell the Weather Channel, or they're looking to. That might get them $1 billion, according to the Wall Street Journal. This is from last night. And then also, SoftBank is moving to sell down its entire stake in Alibaba, reportedly, according to the Financial Times. SoftBank is Alibaba's largest shareholder, or was, I guess, owning more than 12% of the company. So that's a little bit of a big move there. So yeah, I think that's pretty good for the stories. And back to you, Wolf.
All right, thank you. Okay, let's keep it rolling around here. We have Pax up on stage with us. Pax, any thoughts on yesterday's price action and what we're looking at this morning?
Hello, Wolf. Mark, that was really good. I can't wait to get into it a little bit more. Danny, how you doing? Donnie, how are you, kid? DCP, Kim, everybody, OG. I have, since December as expiration in the S&P, I've been bullish going into the beginning of the year. I've been bullish going into March expiration, bullish. I think that the market is starting. I think that the indices are starting to become a little bit more neutral, and we'll continue to trade in this range to decide whether another leg up, which I think takes us up to about 44 even, a little bit higher in the S&P, 44.20, 44.60, or if we head back down to 39.57. So I'm not looking for much. I've been long until yesterday. I'm short a little bit in the S&P, and if we start taking out 40.99, we start heading back lower, I'll add to the position. Otherwise, I'm just going to maintain a small short position and be ready to jump out. I just saw somebody else, another floor guy, another pit guy from the Eurodollars jump into the Twitter Spaces. GKC, George GKC is one of my favorite guys on the floor. When I was a clerk in the Euros in the Eurodollar pit by the way, RIP Eurodollar pit. Sofer's taking over. Anyway, I was an arbitrage clerk. Like Mark was saying, when there were thousands of us that worked on that trading floor in the Chicago Mercantile Exchange, and all of us wanted to be wealthy people. None of us went down to the Merc to be a clerk. We all went down there to be the next big shot trader, to be the next Paul Tudor Jones or Richard Dennis. But anyway, I didn't have a rich uncle or father, so I had to work my way up in that business. And I started off as a runner and then became an arbitrage clerk, hand signals. And eventually I got to the point where I was clerking in the front month Euros for one of the biggest brokers, who eventually gave me my shot as a trader. He backed me. But I would take orders from I would quote the markets to GKC, and I would take orders from them, and that's the brokers got paid on how much volume they filled, and so us clerks were worth our weight in gold if we were good, if we can think quickly, if we can take in a lot of information and stimulus and act on it effectively and quickly without any or very few mistakes, and I was pretty good at that. Anyway, so I trade the opening range, Wolf, and something I traded on the floor. It's something that I think I'm known for in FinTwit is trading the first 30-second opening range in the indices. That's how the opening range has always been defined, and the breakouts of it. So I'll be long above today's opening range, and I'll have my shorts underneath it, and that's what I'm looking at. I can't wait to get into this conversation today.
Awesome. Okay, super fun. Real quick, Uncle Pac, I see you in the audience. I'm not sure if you're having trouble requesting up, but what I do recommend is just make sure that you are on your cell phone, mobile device, and then come into the Twitter Space. Typically, iPhone works best. and tap that request button in the bottom left of the space. We would love to get you up here on stage. Brett, if you have the opportunity to come join us on stage, that would be great as well. Kim, I would love to bring you into the conversation. We're at Market Open. See what you're looking at.
Well, I'm just really excited. I've wanted to do this floor trader space for like at least a year. And, my husband, Mark, worked on the floor, so I get to see it every day. So I'm not going to take a lot of time here. I'll just say, like, for everyone in the audience, there is such a wealth of information to learn from floor traders. In fact, Mark told me yesterday, sell it here. That's his favorite thing to say to me. Sell it here, Kimberly. And I'm like, no, and I like resisted. And he was right. He goes, if it doesn't take out 13.25, whatever it was on the NQ. And I will tell you, every time I don't listen, he's right. So they know their numbers, they know their technicals, and so it's just really fun to see how floor traders can feel the market too. Like a lot of it is just like a living organism when they were on the floor. So I'm going to be quiet and listen to everybody else, but everybody should be in for a treat, and I can attest that they know their stuff.
Awesome, Kim. Uncle Pac, we got you up here on stage. How's it going?
Going good, man. How about yourself?
Living the dream. Excited to hear from you. Some of your thoughts on
Yeah, absolutely, man. Yeah, I actually just looking at the market wise, I agree with what Pac said. I think that the market's turned bullish, and I guess we bottomed in October. We're pushing the upper. Is this the time we break the range? I told somebody, especially you guys that's been around for a long time, man, there was a grind and I know you guys remember 2002 to 2005, just a brutal grind sideways market. I don't know if that's where we're going or not. I would love to see us break the range to the upside and go test, because I actually had pretty much the same. We probably all have pretty much the same levels up to the 44.50 level on ES. But I mean, as far as I could go back in my career, I've never been around a market that has more black swans flying around. Now, none of them have really come home to roost. I mean, well, we had a bank collapse, and now we've covered that up like in the cat litter box. And so, it's interesting times. I mean, we got, basically the threats of war, threats of bank collapse, and and all the perfect ingredients for a bull market. So, who knows, man? I think we're headed for a recession. I think we're going to probably rally, might rally through the summer. Then I think the fall could be real ugly. That's just my thinking. Of course, my thinking is wrong a lot, but I'm just going to follow the charts right now. And right now, charts are set up bullish.
All right, feeling bullish. By the way, I love how everybody's passing the mic around, just making sure everybody gets to share some thoughts here in the beginning of the space. And again, if anybody wants to speak at any point, you can raise the hand. Mr. Top Step, was that a hand raise over there?
You got that right. Look, one of the things about being on the floor is we really, really were part of every market decline, every major sell-off. I mean, starting from the early 80s. So we've seen a lot of this kind of different price action when the markets move up and down. But, unlike 2007, 2008 credit crisis, we've got multiple things going on here. Over the last month, the Fed balance sheet has, they only knocked off like 800 billion and off the Fed balance sheet. And over the banking crisis, they piled on almost, 800 billion back onto the balance sheet. And then when you kind of take it out a little further and you kind of look at what's going on in the mortgage sector, and you look at kind of what's going on in the housing sector, and especially where it comes into like the commercial real estate area, which you've already seen some very big defaults. I have a really hard time kind of getting through the idea that the markets are just going to shake all this stuff off. We talk about inflation. Inflation's going higher, maybe dipping, yesterday's number. And generally, I'm always bullish. I mean, I've been always loved buying the dips and picking lows and stuff like that. But my whole trading philosophy has changed over the last year or so, year and a half, and for a lot of good reasons. I think the geopolitical scene is horrible right now. I think you've got several countries in the BRICS trying to redo their own currency. Um, and we've got trade wars going on, and for me to jump out and say, "Hey, everything is cool, everything's going to be fine, the markets are going to go up," I just can't find it. I'm thinking to myself, what we're in is we're in somewhat of a lull right here, and I know that people may believe it or not believe it, but I think sell it in May and walk away is going to give a new. It's going to give a new meaning to that saying. And I also have been saying for months that I think something big is going to happen in the summer, and I can't really put my finger on it. But during the summer is when things kind of get slower and people kind of don't pay attention as much or on vacations. And I think there's just too many moving parts out there to think that we're just going to start going straight up. Can we bounce? Sure, we bounce, but again, every rally that I see has been a dead cat bounce. And again, I want to reiterate, I'm a bull at heart, but I just don't see it. I think the writing's on the wall for a steeper decline. I don't really like saying that, but I did all the program business for the Union Bank of Switzerland. I took a $10 million hit in the flash crash. I think we've tapered off from these big ranges a little bit, kind of trying to get a footing for where the market can hold. And I don't disagree that we could rally, but I just don't see any extended rally. And I think if they do rally hard, I think you're supposed to sell right into it.
Absolutely agree, Danny. 100% well said. I don't mean to jump in, but I just thought that was really well put. We're going to have a busy summer, and we all better be ready for it. Whether we rally or whether we break, the market is going to tell us, and it's going to tell us in real time. We just have to be prepared for it. And I agree with you, Danny. I think that the rally, we might have a little bit more in this. The market will tell us. But if it doesn't, if we turn around, it's going to be tough, and it's going to be rough, and it's going to be, for us, for futures traders, it's going to be fun.
Right. I can see other guys who got their hands up, but look, I'm just looking at the way that the amount of stocks that it's taken to push the market up over the last month or two. It's not a very broad rally. Apple and Microsoft made up 20 or 30, 40% of the rally, and another 5 or 6 stocks. Now they're saying 20 stocks are kind of make up most of the rally. I don't think it's a really great time to be picking stocks. I think that on a defensive mode, that you should really be protecting your positions rather than adding to the positions. And obviously, if the market starts going up and it signals that it's good, we're going to all know it. But in the interim right now, I think we're still up against a lot of stuff that really is not positive for the market.
All right, loving the commentary. Mish, let's go ahead and bring yourself and Keith in.
Yeah, hi, Wolf. Hi, everybody. Hey, Mr. Topstep. I think we go way back, huh? So, yeah, I'm in your camp. What's so interesting about the market right now is the diversions that we have between, let's say, the tech sector, particularly semiconductors, that have shown some relative expansion vis-a-vis a 2-year business cycle, whereas the banking system through KRE, particularly regional banks, maybe holds the March low and the low from last week, maybe not. Retail also. So we're kind of stagnant. I mean, really, it's a stagflationary environment, which is why if you're confused, you can say bullish if you're looking at things like junk bonds that are showing more risk on, and you can be bearish if you're looking at things like retail and the financials that look like they can getting even heavier. And meanwhile, the indices in this kind of trading range, persistent trading range. So that's kind of my thoughts there. Of course, you know that this is a great time for this conversation for us to have today from commodities, because I have Keith Schneider with me today. Keith was on the floor even before I was. And besides the fact that we both learned how to trade commodities on the futures exchange, we actually found that we can have love, sustaining love. We've been together for, oh my God, we've known each other for a long time and married for a long time. So I don't know if you want to get into all of that, but when you do, I mean, I would love to just have some fun and tell you about what life was like on the floor, and just end this little comment here by saying, why stress out about equities? commodities have been banging, man. If you're trading gold, sugar, coffee, DBA, all these things are just flying. Silver gold ratio. I mean, there's a couple of even oil is consolidating, not really sure what it wants to do. I mean, it's just giving you the message right there. So that to me, we've been basically long the metals and the miners in our quant models that Keith created. Um, we've had heavy positions in most of the commodity markets. We've been in DBA, which is over 21 right now. I mean, it's giving you a message, guys, and it's blaring, and that is markets can stagnate, even go down, maybe even go up a little bit. I agree with Top Step on the sell in May. I hate trading in platitudes, but actually I think this year it could be a real valid point. And just keep your eye on those commodities, because they're telling you that whatever the PPI, CPI, PCE, whatever number you want to throw at us, those commodities are telling you that inflation is certainly not done. And whether it's because of the typical reasons that we had coming out of COVID, or more geopolitical concerns, dollar concerns, weather concerns, major drought in Argentina, there you go. There's the message. Just pay attention.
This is a change in voice, so it's Keith speaking now. One thing that's to me really clear is that there are bull and bear markets that seem to be, or actually are, very contradictory. So it's sort of like the Academy Award winning movie this year, Everything Everywhere All at Once. And so you've got bull markets in certain things, for instance, semiconductors going up at the same time utilities are going up. So the message is, let the charts tell you, read them and trade them, because you're going to get explosive bull moves in things that are contradictory to others. And learn this on the floor going back. So, the classic sector or commodity rotation is basically really in play more than ever. So, when I was on the floor during the great commodity boom, it was interesting because cocoa was sort of dormant, and at the same time, gold, silver was explosive. So it was a play in determining which commodity you should be playing in. And that's sort of what we did on the floor. We monitored all the different commodities and gravitated to the one that was doing the best. Now, in those days, as you know, being on the floor was a very physical experience, and you could feel it. You knew if gold was going to lead and, soft commodities were sort of dormant because it was quiet. So now it's all electronic, but the same principles apply. So follow where the volume and the price movement and the relative performance is going. If you use those three metrics, you can determine where to play. And earlier, I heard someone talking about the opening range. One that was, to me, the core concept. So if you look at the opening range as a floor trader, now, looking at things off the floor and thinking about how markets operate, the opening range is sort of like, the 200-day moving average for most investors. If you're on the floor or if you're playing short term, the opening range for the month, even the quarter, works extremely well. So the core floor trading principles apply today, just expand it out. Now I hand it back to Mish.
Well, no, go ahead. We've said enough.
No, great breakdown. I see we got a lot of hands up. Strat, I want to come to you real quick because I think it might be a trade, and then I want to bring in DCP.
Okay, so there's two things real quick. So yes, I've taken a couple trades. I've taken them to the long side. I've just been taking reversals off of the daily VWAP. So I've taken 3 trades, 3 wins, and so far so good. But more importantly, I had my hand up because I wanted to ask this question. With the great panel that you've got going on this morning of former pit traders and just the experience that you have with this panel, when you guys mention the opening ranges, I know with Pax it's the 30-second opening range that he likes to pay attention to. What is the opening range? It just gets tossed out there so much that I'd like to hear from the panel
Let
as
me
far as those opening
real
range.
quick.
I mentioned the 3 minute because I like paying attention to that 3 minute, but that's kind of my follow-up question to you
Let
guys.
me jump in real quick because I want to piggyback on something. I'm sorry. What was the previous speaker? What was his name that was with Mish?
Keith.
So Keith, this is Pax. So intraday, I use the 30-second opening range as I did on the floor, but I also use the monthly. I use the weekly reopen on Sunday. I use the monthly. I use the quarterly, and I use the contract opening range. Okay, I mean I don't use a 15-minute, 30-minute, or an hourly, but I'm going to use those different things to give me short-term trades, intraday trades, swing trades, and longer-term trend trades. I'm gonna shut up and let everybody else talk, but I just wanted to get in there, OG, and throw that out there because I think everybody has a misconception that I'm scalping these markets. I'm not scalping these markets. I'm looking for intraday trades for a shorter term, and then swing trades and longer term trend trades. I'm not scalping for a point here or 2 points here and trying to speed scalp against these algos. I can't do it.
Yeah, trading against the algos is almost impossible right
Truly.
now. So what I've done, what we do is we've taken that opening range concept and just enlarged upon it so it can help set up what I would call mini swing trades, which is a couple days, to swing trades, which could go on for weeks or months. Right. So what we've done is basically take the concept. Obviously, if there's a huge gap, you want to move more quickly. But outside of that, I use a 5, a 30-minute, the daily opening for the month. So like you could use a 1 to a 3 day for the start of a month. And then we use like a 10-day for each quarter or each 6 months. So those are the core principles. And of course, opening range failure. So you have a breakdown and then a reversal up. And if it takes out the low of, let's say, a 30-minute range and, VWAP at the same time, you've got a false breakdown within a potential, larger trend. So that's the core concept. And I think for people listening, you can think of the opening range and the various uses sort of like, as I said before, for the 200-day moving average. To me, that actually kept me in business. Because when I first went down to the floor, that was 1977. I was the youngest floor trader ever on the New York Mercantile Exchange. And I watched, like, I forgot who was talking before, so many people look brilliant for a couple days, a couple months. And oh my God, this guy made 400,000, day trading over the last month. And 3 months later, they were gone because they had no risk controls. So the bottom line is the opening range used properly is sort of like a core risk control methodology. If it breaks the opening range, whether it's, depending on the time frame you're in, you have to leave and exit. You're wrong. And it preserves capital and keeps you in business. If it keeps you in business, then you have the opportunity to obviously learn and then leverage your winners and end up with a successful career.
I just want to add two very quick things and give other people a chance to speak. One is the reason why Keith is sitting with me is, unlike me, that is social media driven, he doesn't do any social media. So he doesn't have his own Twitter handle to be on with you today. That's number one. And number two is, those of you who don't know why we're even talking about opening range, as floor traders, particularly if you were futures floor traders, when the markets would open, some commodities opened all at once, but many opened month by month. So, for example, if we were trading crude oil, if the current spot month was May would open, then June, July, et cetera, et cetera. So it would open and then close, and then June would open and close, and then July. And once they got through all of the months, then there would be a reopening of everything at once. And what would happen is there was a real statistical edge based on that very short-term opening range, that if it followed through to the upside on the reopening or the downside, you would have your first basic scalp of the day. So what we've done through the years is we've taken that premise of the opening range based on the futures, and we've extended it depending on how the market opens. If it has a wide gap, we might use a 2-minute opening range. If it's a relatively narrower gap, we might use a 5-minute opening range. And if it's within the range of where it's been trading, we'll look at 30 minutes, because statistically, lots of instruments make their full range for the day within that first 30 minutes, which means that you have an edge if it takes out that 30-minute high or it breaks down under that 30-minute low. And that's day trading rules. But to Pax's point, it also can be applied if you're looking for an entry to get into something for a longer term trade, whether it be a mini swing trade or a swing trade. Very rarely do we just get in right on the open. We will wait for some time frame to go by. And like I said, longer term would probably be more like a 30 on earnings. And this is something you should all know because we're in earnings season right now. 2-minute opening ranges are great on these big gaps, right? 100%? Of course not. But let's say you get a huge gap up in a bank earning tomorrow, let's just say. You can use a 2-minute opening range, and if it takes that out, you buy it and you put your stop right under the 2-minute opening range low. Or conversely, if it makes a big gap down, you can buy it above the gap up, which means maybe it's been overdone, or you can sell it below the gap and then put your stop right over the 2-minute high. Does that make sense?
Makes perfect sense. Absolutely.
All right, I want to pull in DCP. They just haven't had a chance to speak yet, and then I'll come around to some of those others that had hands up. But DCP, you want to throw some thoughts in the mix?
Absolutely. Good morning, everybody. Can you hear me?
Yes, sir.
Okay. My first thought looking at this market is we still haven't been able to trade above 41.55 in the ES since this bear market really started. So you're literally talking 14 months that we can't get above the 50% retracement of this bear move. And I don't think we can go anywhere to the upside until we can get above that and sustain that for a little while. I mean, I've been trading since 1986. I did 18 years in the Eurodollars, and then I did 8 years at MBS doing securitization and mortgage-backed securitization and sales and trading. And so, I mean, I think I've seen every crash out there. And what I see now is we fix crises in an amazing amount of time. So, I mean, look at the banking crisis. It was fixed in a weekend, right? So, but that doesn't mean the market's done with it yet. It still has to cycle through, and people have to figure out what's next. So the next question is, when's the recession, right? Well, most everyone's assuming we're going to get one. But what if we don't? What if we just trade sideways for the next 10 months until everything kind of settles out and we digest and we move forward? When I look at this market, I think the biggest driver right now is what's going to happen with interest rates coming down the line. We've got a Fed that's probably going to raise rates at least one more time, maybe two. The market's not tanking. We still have high inflation. It's embedded. It's not going anywhere. So the Fed's going to continue to raise. Until the Fed's done, I don't see the ES being able to rock to the upside. But I don't believe we're going to see a crash. I think we're just going to trade sideways for a while. You can literally sit here right now and go, you can buy them at 40, you can buy them at 4,095 and you can sell them at 4170, and you can do it consistently for the last 3 months. I mean, it's kind of crazy. It's just a free money range trade. You watch the VIX go from 18, it spikes up to 20, it blows to 30, and then it comes back down to 20, and then it range trades between 18 and 20, and then you watch the interest rate move. The best trade of the year so far was literally the SOFR market when everyone was looking for 2 50-point hikes back to back a month ago before the banking crisis. There was literally, you could make 100 bips on the downside, turn around and flip it and make 85 bips on the upside, and then sell it again and catch 45 bips back down on the downside. So I think nobody knows where rates are actually headed, and I think that's going to be a key driver. We need vol under 18. We need rates to start easing. I don't think we're going back to zero money, but I do think we're going back to 3%, or at least that's what the yield curve is showing right now. And until that happens, I think the spoos are sideways. Thanks.
Thank you. All right, let me throw one thought into the mix here, and then I will continue going because I'm loving the stories. I want to give major props to Elite Trader Funding, who really went out and brought together all the wonderful people that you are hearing on this panel. They have great relationships with them, and that's because they are just one of the leading prop firms when it comes to getting people into this world of futures trading. We've been doing spaces with them for months now. They've been extremely educational. We've been taking trades with them. We've been using their platform, and I do this all to say right now, they're running a massive flash sale. So why do we work with a prop firm? For all those that are in the audience, it's because we don't want you to blow up your personal trading account by trying to leap into futures. I know that a lot of my audience trades options, and options can be tricky for multiple reasons. The biggest reason is even when you predict the right way that the stock is going to go, you're bullish, stock goes up, you can still lose money with options, and that's because of time decay, theta, and IV spikes, right? So you have both those things working against you, and you're constantly sitting there in the trade, waiting for the move to happen while losing money, right? And that's why we're looking at futures where you can still get the volatility, but you don't have to worry about time decay. Now, at the same time, there's still volatility to be had, right? You don't want to come in here with a $5,000, $10,000, $20,000 account and just start trading them when you have no experience. And that's why we work with Elite Trader Funding. They provide fantastic simulator-based accounts. You pay a one-time small fee, and right now there's a massive discount on it that's actually built into the link in the top of this space. That one-time small fee gives you access to the simulator, and that way you can trade with a little bit of your own skin in the game, right? 30, 40, 50 bucks, whatever it was for the simulator. Cheaper right now, I think, because of the discount, but you don't have to blow up your own account. But the beauty to it is, if you can perform well, and over the next 2 to 3 weeks, we've seen people really, destroy the simulator in 2 to 3 weeks, do a great job on it. You can actually get a fully funded account from them and then trade with that money and keep 80 to 90% of those profits, allowing you to really never have to go through the worry and concern of your own money, $10,000 account, worried it's going to blow up. This is what we see as a much safer way and how a lot of people get started in this world. Eric, I just want to throw it over to you if there's any other comments you want to throw on that, and just remind people, take advantage. Flash sales right now, links in the top of the space. It's a massive discount, and it's a great way. If you're looking to get started with futures trading, don't put up all your own money. Try a simulator here, and first and foremost. Eric, anything else you want to add on to that?
No, I mean, this is great. I think I don't want to take too much time from all these great speakers. I mean, I'm personally learning myself all these new ideas and ways of looking at it. So, yeah, please come check us out. If you have questions, email our customer support. They're top notch, and it's a great way to test out all the things you've learned today. So, yeah, continue on. Thanks.
Yeah, absolutely. So if you can't find the link, you could just DM me. But if you're on mobile and you're in the space, it's in the top of the space, pinned up there. So just scroll up. You can find it there, or you can find it on my timeline. It's the last tweet that I've put out. It's commented underneath it. Let's keep going here. We got another 30 minutes with this awesome panel. Jam-packed day today, so we're going to keep it moving. Let's go to Mr. Top Step.
Thank you. I just wanted to get back to the opening range stuff. On the trading floor, I think a lot of you guys will remember that there was these guys that used to walk around with the sheets, right? They were like support and resistance levels. And I always like trading the opens because I think if you get it right, it starts out your day. You can play with the bank's money. So I would pay attention to that closely. One of the things that a guy by the name of Tim Hefty used to do, and I never really figured out the formula completely, was that he would look at a 9 o'clock reading. If the futures opened at 8:30, he'd come back and he'd say something. Well, if the futures are above the opening range at 9 o'clock, you're probably supposed to be a buyer, and if it's below, you're supposed to be a seller. I never really quite understood that, but my best trades really are trading gap opens. And I think that like yesterday when the futures rallied after the CPI number, I got short a little early and then I got stopped out. And then I got short at 71, 41.71, and I wrote it down to 41.16 half. Now, a lot of people were asking me why I sold it before the open. And the reason I sold it before the open is because one, I think you got to look when the markets gap up like that and they rip like that. I think that they use up a lot of the buying energy. So what I was concerned about is if I was going to trade the open and wait till the 9:30 Eastern time open, that I was concerned that the market would sell off and then not give me that edge that I wanted to capture by selling into that number. When the markets popped up. But I also want to jump on one other thing. I'm probably not the best person to talk to when it comes to like indicators on my charts. I'm very, very basic. The more that you throw at me, the more that I tend to lose track of the things that I think that help me kind of read the markets, which really has a lot to do with pattern recognition. Okay. And that may sound funny, but on the floor of the mercantile, on the floor of the Board of Trade, we only got to, there were charts, on our desk and stuff like that. But really back in the early 80s and stuff, the only charts that people had really were in their hand, the point and figure charts and stuff like that. And I worked for a guy by the name of Rick Barnes. He was a well-known desktop trader from a company called C&D. And I worked in the bonds at that time, and Rick would call me up and say, "Hey, what do you think?" And I'd say, "Well, it looks like they're trying to hold it, 31, and it looks like there's resistance at 11, so you kind of trade that range." And one day he called me up, and he was a really, really well-known desktop trader. He probably was trading 20 markets at once. And he said, "Listen, I want you to go down to the floor." And he handed me a chart to do a point and figure chart. That meant me making a point and figure for every tick that the bonds did that day. And one day Rick called me back up, and he really liked my opinion. And he said, "Listen, I want you to come up and bring the chart. I want to talk to you about what you've done." And I came up into the office, and I probably did it for 2 days. And he said, why are you not filling in the chart?" He said, "It'll help you read the markets." And I said, "Rick," I said, "really, to tell you the truth, I stare at the boards all day." And I'm sure Pax will agree with this too, and other guys that were on the floor. When you're constantly looking at the prices flashing at you all day long, I believe that you garner some type of pattern recognition from that. And I basically, when I trade during the day, I'm using these imbalance charts that show you the volume traded on each side, the bid and offer throughout every print in the Nasdaq and the S&P. It's available in all commodities. It's available in all futures. And really, where I gain my edge is I pay attention to the VWAP, very basic tool. And the other part of it is I look at high and low volume prints. If the S&P comes down to a low after selling off hard, and I see that the volume dissipates, and on low ticks you only see like maybe 5, 3, maybe sometimes even 1 or 2 contracts traded. To me, that tells me that the sell program or whatever news event that came out has kind of used up its thrust, and then I go in there and then I'll start to buy. I also like using the 15-minute Bollinger Band. I think that, and again, these are really basic tools. They're not really something that your basic trader can't use. But I understand that there's a lot of different tools out there that, you can put on your charts. But for me, the more that you put on it, the more I've got to look at, and it takes away from me reading kind of the volume of trying to trade. And again, during on the floor when Pax was in the Nasdaq pit, he could follow the order. He could follow the order flow. Now the only way to follow the order flow is to have these types of charts where you can see the volume going on. And obviously, the level of program trading that's going on in there, it's I don't want to fight the bots, but I also would look for like inflection points where it looks like the programs are running out of gas. Now, yesterday after that number, when the S&P rallied up to 74 and I got shorted 71, you could see that the volume prints up at the highs of the day. There was no volume there. And I thought to myself, people got long into the rally, and generally off these types of numbers, you'll get some type of retracement. Now, I didn't know that they were going to dip that much, but in the big scheme of things, what we've really been seeing, we've kind of gotten away from these, 50, 80, 100, 120 point moves. So when the ranges are tighter, I think it makes it easier to kind of see this stuff on the charts, and you can trade the ranges better. Just kind of a thought.
Awesome. Thank you. Yeah, MTZ, I see your hand up. You'll just have to unmute, MTZ.
Can you hear me?
We got you now.
Okay, so something also that's interesting is Twitter has become the floor. On the floor, Danny could watch me. Danny might be doing some of my business. We had the order fillers. People talk, Danny, you talk about the guys that got started. Well, Tudor had his own desk. Tudor had two people on the desk. Tudor had his own order filler. You had Borsellino in the pit. You had Solomon. Danny was to the right of me. So Danny could see anything I was doing. We were huge in program trading. So, number one, Twitter's somewhat become the new floor with the information exchanging so rapidly. And yes, it's not the same as the floor now. But one thing Danny touched on that, and I think is key, it's key for me. And by the way, I still do all my own numbers every night after the close. Why? The feel. People often ask, how do you see that? Like yesterday's rally. I said it. This everybody, and I'm watching Twitter. Here we go. It's taking off. Oh, well, I'm a contrarian, so no, I want to sell this. But that's my first point. Is Twitter, to me, I use it as a counter trend a lot of times. I look at where everybody's going and how hard they're speaking to it. There's so much information. Danny touched on another good point. The amount of information, to me, it's a little too much at times. And if you go back to the basics, you're hearing so much information come across Twitter. I like watching the screens. I was trained like Danny. When you're staring at, we had a big screen, so you're getting a feel for that movement. Now we also had the feel of the 500 people in a trading pit, and you could literally feel the floor move. All right, literally, and that was helpful. So you don't have that as much, but I get the same feel from watching Twitter when everybody leans to one side. That's my first point. Second point, geographically, we all live in different areas. Danny and I feel the same about where Chicago is, and I won't get into that. And it's funny because Seattle as a city is heading that way right now, and I won't get into that. Same with San Francisco, as people saw Whole Foods left San Francisco, Walmart's leaving Chicago. What I'm speaking about is I work with 100 to 150 kids. Who are they? They're the sons and daughters of Microsoft, Google, Amazon, Boeing. Those are some of the stocks that have lifted this thing. My manager for my under 12 team is a PhD from Turkey, grew up in a small village at Boeing. I know they took Boeing down to 100. Everybody was throwing it in the dumpster, but all my manager is telling me is they have so many orders they don't know what to do with it. On the opposite side, one of the kids I mentored in college, he's one of the top commercial real estate guys for Amazon. It's slowing down. I call him once a week. What are you seeing? He moves their real estate. That bank, SVB, was, his words, involved with everybody on moving properties, on moving money. I'll say this in closing, and on another day I'll tell you how I sold my Bear Stearns stock, 90% of it at $140. I'll tell you how I figured that out. Is you're gonna you've been trained. You've trained everybody, and I see it on Twitter, for the government to vis-a-vis the Fed. And Danny or Pax or anyone can chime to this. I worked in the bond room at the Board of Trade for 2 years. I ran the retail desk. We didn't hear the Fed speak all the time. I didn't even know you couldn't even ask me who the Fed governors were in 1985. Now the noise and the speak and the trained behavior is, especially by, and I won't call them newbies, is when are they going to cut rates? We need to be saved again. For me, I'm somewhat of a perma bear. I don't think you've seen the end of this. I understand, yes, this may be the start of a rally. I'm not sold at all on the fact that this is a new bull market. What's going to sustain it? My friend that moves in, I'm not hearing it from my friends at Amazon. I'm watching the parents of Microsoft walk around and what are the layoff numbers? You're in one of the hottest cities for the last 10 years. And I won't even say where. If you drive in downtown Seattle, what it looks like, it's unbelievable, between the fentanyl, the spray paint, the lack of police protection. It's unbelievable. All right. I don't know if you saw the CNN thing yesterday when they were filming about crime in San Francisco and they smashed their window in. But I'm just not sold that, okay, there's your correction. Last year was a bad year. Jerome, come and fix it again. When are you going to start cutting rates? I think you've got more to come. And being in Seattle, we're not in the Midwest. We're not in Florida. We're not in New York. We are firsthand those companies that are carrying this thing outside of Apple. So that's my feedback.
Awesome. Appreciate that feedback right there. I want to give also just a wonderful thank you to the speakers that are joining us up there on stage. A little bit different from our typical spaces, but hopefully the audience is enjoying and learning. I think by the fact that there's nearly 500 of them in here that are with us, they definitely seem to be having a good time. And make sure you are following the speakers that are on stage. You can learn a lot from them. Again, this is just an experienced panel. We have probably about 200 plus years of experience combined between the panel up here. None of that is coming from myself. It is all coming from them. So make sure that you are following them and doing great stuff. I'm learning together with y'all about the futures trading world. Super excited. One more time, also a big thank you to Elite Trader Funding for everything that they're doing. And a reminder, there's a giant flash sale right now. The link that's in the top of the space has it built into it. So when you get to the checkout page, you'll see a big discount applied. So I recommend going in there, check out one of the packages and go to the discount page and see if it surprises you with how cheap it is to start learning the right way to trade futures. Okay, we're going to keep it rolling around here. Just a reminder, we got about 15 minutes, so appreciate everyone that is sharing the stage. DCP, want to go for it, and then we'll go to PAX?
Sounds great. Thank you. By the way, Mr. Topstep, I ate breakfast every day with your cousin Charlie when I was down on the floor. I just thought I'd throw that out there.
Well, look, I remember you from the floor, and he's just unbelievable. I mean, have you kept up with him at all?
Oh yeah, I talk to him all the time.
Yeah.
We were actually talking the Monday after the SVB crisis, and he's like, "Is it going to tank?" I'm like, "No." He's like, "What do we buy?" I'm like, "I don't know. We got to figure it out." I'm like, "Buy Eurodollars." And I literally texted him the Friday before the week before the bank crashed over the weekend. I'm like, "Charlie, buy the SOFR. Buy the SOFR.
Yeah.
Just buy it, both hands."
Well,
And
for those of you who don't know who Charlie Riley is, his bad DJR on the floor, and he started well after me, and he retired well before me. So that says a little bit about it. But one of the things that he did right after he left the floor, and I thought it was amazing that when he left the brokerage firm, that unlike everybody else on the CME floor, he wasn't looking to get any money back from anybody. You know, he wasn't looking for the kickback. But
nope.
His big claim to fame is that after he sold his seed, he took all his money and bought Apple, right?
Yep.
Yep. That's how he made a
Yep.
lot. All right, I'll let
Yep.
you talk, but good talking to you.
It's a pleasure. So I like to, when we're talking about entries and exit points and how I like to look at things, I think I like failed breakouts. I like taking the other side. And I like to do it when it's extended. So the way I do that is I look at a tick chart. I like a 10,000 point tick chart with a 13 moving average and a 30 moving average. When I get my crossovers and it's overextended, I'll take the other side. I also do that on a longer term scale. So I saw the Ted Lasso show a couple of years ago where he talks about the happiest thing on the planet is a goldfish. And it's because it has a 10-second memory. And I think the 10-second memory is what you need to be a floor trader with. You got to forget your last trade. You just got to move on and stay with a clear, open mind and look at what's next. At the same time, though, you have to be an elephant. You've got to have a long-term memory. And you've got to remember the mistakes and the lessons you've learned along the way. So that was kind of my analogy of how you can stay in this business for a long time. Risk management is obviously the key. You've got to take care of preserving your capital. If you don't have any capital, you can't play. You got to start all over again. It's really hard to do it. So you really got to be careful with that. I'll move on and let Pat talk.
Donnie, nobody could say it any better than that. We need to have a very short memory. Gaudelli talks about how Mickey Hoffman had told him that one of his strengths as a trader is that he heals quickly, and that's the truth. There's what's in the past is in the past. That's why I talk about, I don't lose money. I spend money. Because if I lose money, it's got all kinds of negative connotations to it. Of course, I spend money in the markets. It's a business. It's not a game. I'm not playing. I'm not gambling. It's a business. Anyway, I wanted to kind of piggyback on something Danny was talking about. We all kind of grew up together. The Chicago Mercantile Exchange, Board of Trade, whatever trading floor we were on was a real community. It was like a neighborhood. And Donnie and I were clerks together in the Euros. DCP and I were clerks together in the Euros when we were kind of growing up. So I feel like I kind of grew up with him. Danny D-Boy was, or Mr. Top Step was a much more, and so was MTZ. They were much more established than I was, a lot quicker. I started clerking in the at the Chicago Mercantile Exchange after high school, 1988, right after the crash. I started as a runner, and then I worked every job up until I earned my shot at trading. And I got my membership in 1997. So when I started trading, I wanted to trade a market that still had some upside potential, because we all knew that we only had a few more years left before computerized trading had taken over. And if I was going to catch the tail end of trading, I wanted to make the most of it. So I chose to go into the NASDAQ pit, which was still a new contract. It had opened just only months previous, or a year previous to that. It was still very small, with a smattering of ex-currency traders in there, with a couple of brokers, and maybe about 5,000 contracts a day. We were in the NASDAQ was, I don't know if you guys can believe this or not, but the NASDAQ was $100 a tick every one lot. So if I bought one at 31 and sold it at 32, that was $100 bucks. So we didn't, and this is something I think that most traders don't understand either. we did not have access to charts. We can keep charts by hand, like point and figure charts, or some guys would some traders would keep a bar chart or something by hand, but I was an active trader. I've always been an independent trader. I don't trade a fund. I trade my own money. I always have, for better or for worse. So when we all kind of grew up together and earned our way into that business, one of the great things that Terry Duffy said during the FTX debacle, Terry Duffy, chairman of the CME Group, was that if SMB was on the trading floor, he would have been found out to be a fraud within minutes, because our word was our bond, and our reputations was what our business was staked on. If you had the reputation as a scumbag, you wouldn't last very long. I mean, you were who you were, and people knew that, and acted accordingly. Would freeze you out. You wouldn't be on the floor very long. If you stiff somebody on an out trade or something like that, just a million different ways that you can blow your integrity. But your integrity was everything in that business. You can be an ass, you can be cocky, you can be arrogant, you can be all kinds of things. But as long as you lived your life with integrity, you had a business that you can build upon. So one of the great benefits, there were a lot of benefits of coming up on the trading floor. One of the great benefits of coming up on the trading floor was that I can watch great traders and I can learn from them. I can, Mark Metzger or MTZ had brought up Louis Borsellino. Louis was a great S&P trader. So I'd watch him from the NASDAQ pit, and I'd see how he carried himself and see how he acted. Ira Harris, who is my, I speak to Ira all the time, a very close friend and a mentor to me, is one of the best macro traders in the world. Even still, I was able to ask questions of Ira. People told me who were good and who were great, and I was able to watch them, and I was able to find out who they were by their reputation. I don't know how traders do it now. FinTwit is full of so much nonsense and so much great information and so many great people, but so much nonsense and people that are hiding behind, created personas that you don't have any idea who they are or not, and how do you find out if they're real? Well, I don't know. Things like this maybe is how we can discover. But I had started as a small trader, trading 1 lots and 2 lots in the NASDAQ, earning, because it was $100 a tick, earning my way up, and every day, because I did not have access to charts, I had to like MTZ does, I had to set my numbers the night before, and I still do it. I don't trade anywhere except for pre-approved price areas. For example, yesterday's opening range was 41.56 to 41.60 in the S&P. So I was short underneath 56, take profit at 41.41, and take profit at 41.22. That gave me a really, really good trade, and I stayed short until this morning. I covered them on the open, and I'm completely flat now. Long back above 41.41, back up to 56, and then above that to 77 and 87, right? Pre-approved levels that I'm going to take action at. The prices I call action areas, right? I'm going to take action at those action areas. And when I have the ability to be able to carry a position, that becomes a swing trade. That swing trade becomes a trend trade when the market is moving accordingly. Starting off as a small trader and earning our way in is no different whether we were on the floor or in the pits. I happen to be at the right place at the right time on the trading floor, with the modicum of talent and ability and my integrity intact. I caught the beginning of the tech bubble in the late 90s, and I was a pretty big trader by the time the tech bubble burst. I kept making money, and growing it. So as the volume in the NASDAQ pit grew, I grew. If the NASDAQ was doing, this is something I think that was very difficult for so many of us that left the floor, was learning how to size down. The secret to being a great trader, everybody, is not how many trades you catch and how many wiggles on a chart you're able to trade, but how you increase your size, decrease your size, and not trade. Leaving the floor, not decreasing our size was very difficult for many of us, and deciding when not to trade was even more difficult because we were all so active. The more activity you had, the more money you made, right? You don't have a process, you don't have a methodology, you're going to overtrade, and you're going to overtrade, you're going to overspend, you're not going to be in business very long. And desperate measures for desperate people, those sorts of things. Go ahead.
Really good stuff, Pax. So yeah, I want to get somebody's hands. I have a hard stop in about 4 minutes here, so I just want everyone to keep that in mind and just remember to share the floor, please. So Kim, coming to you, if you can keep it to about 2 minutes, so we can get to Mish as well.
Yeah, no problem. I just want to say, like, Mark does do those numbers every single night by hand. It's pretty interesting to watch, like, and how accurate he is in those numbers. But what I really wanted to say more than that is everyone on this panel I've learned from and gotten to know because, you know, of Mark's relationships with them, Danny, Pac, Donnie, all amazing people. So everybody make sure you're following them. But for last, I want to say, as a female trader or, you know, swing trader investor, it's been really amazing to me to build a relationship with Mish. Mish is literally one of the kindest, most generous people that I know. And so for any of you women in the audience, make sure you're following all these guys. They're amazing and kind also. But if you also want to relate to, you know, another female trader, Mish is, her and I have built a relationship, and the information that she puts out on her Twitter about the sugar and the commodities and watching those as far as what does that look like for the indices. She puts out amazing information, and it's really been wonderful for me to have somebody to look up to and that I feel like I can get great information and build a relationship with. All you guys are amazing, and Mish, you are one of my favorite people.
Love it. Speaking of which, let's get to Mish. And Mish, if it's able to make it just a minute or two, I'd love to give the final minute to Elite Trader Funding as well.
Okay, well, first of all, Kim, thank you so much. I'm actually blushing as I'm sitting here. That was wonderful what you just said. And I had the pleasure of meeting in person Kim and Mark, and we'll actually get to see them again in the beginning of May when I go over to Stock Charts. So can't wait. I just, as a woman, since I was been sort of introduced like that, going on the floor, what everybody said just prior to that, Mark and Pax Trader and Mr. Topstep about on the floor, about the integrity, about point and figure charts, about following the momentum, about being very active, all of that is so true. And as you know, the old joke says, I did all of that and learned all of that in high heels, so to speak. And so really, I just want to leave with this so that we have time for somebody else, is that the biggest thing that I learned from the floor, and really, Kim, this is where the generosity, as you say, comes from, was how generous everybody was down there to take a little girl under their wing who was clearly physically different than everybody, but nobody really cared about that. There was no overt chauvinism or all the stuff that one would think. It was just the opposite. It was like, here is somebody who wants to learn. Let me teach her what I can. Let me show her what I can. And then when I started to excel in charting, I became sort of the mentor to guys. And so there was a constant shift of relationships. And so in this world, it's harder, but you can, from the people that were here today, learn, and they're all coming from the same place: experience, generosity, and integrity. So with that, Wolf, I just want to thank you for having me on, and thank for everybody's comments, and I look forward to much more.
Fantastic. And because I do have a hard stop coming up in a minute, I appreciate you coming, Mr. Topstep. We're definitely going to have you on more of these, but I do want to give Eric this last minute here for anything else that they want to share before I have to roll into my next space.
No. Thank you guys so much for coming on. I really hope that you guys will be able to join us again in the future, because this was fantastic. I mean, I personally learned so much from every one of you guys, and it's also great hearing the stories and just kind of seeing how everyone does their own little analysis and how much discipline there really is required to do all this. And you know, like I said, like we want you guys to all learn from this, and if you guys feel like that's a chance for you to maybe apply some of the things you learned, please come check us out, and we'll email us, chat with us. We have a community. Please come on over and we'll make something happen. Thank you so much, everyone, for coming on.
Love it. All right, we're right at 10:30, so I am going to be moving into my next space. Thank you to DCP, Mish, Kim, Strategy, Uncle Pac, MTZ, Mr. Topstep, Pax, of course, Elite Trader Funding. I hope everyone took advantage of that massive discount that we have in the top of the space. Go ahead and check it out if you haven't. We're going to be rolling into my next space right now. We've got a wonderful